Hey everyone, welcome back to Corporate Decoder. Today we're diving into the world of Unicycive Therapeutics, a company that just pulled a rabbit out of a hat or maybe just shuffled the deck with its shares. Prepare for a wild ride of reverse splits and stock market acrobatics. Unicycive just did something called a reverse stock split, which sounds like a magic trick to make your stock disappear. Stay tuned and we'll unpack what all this means for investors and the future of the company. Before we jump in, if you're into getting the real scoop behind corporate filings, make sure to subscribe. Also, we have a Discord community linked in the description below, so come join the conversation. Alright, so what exactly is this Form 8K about? Well, it's basically a corporate Uh-oh report where companies tell the Securities and Exchange Commission about big changes that might matter to investors. In this case, it's all about a reverse stock split. This report is dated June 17, 2025, which is the date the event happened. Think of it like the day they pushed the button on this whole reverse split thing. Here's where things get interesting. This section tells us there's been a change that affects the rights of the people who own the company's stock, the shareholders. Basically, they changed the rules of the game in a pretty major way. This part explains why all this happened. Unicycive held a meeting back in June where the shareholders voted to allow the company's leaders, the board of directors, to do a reverse stock split. That basically means squishing together existing shares to make the price higher. Back on June 9, the company talked about the possibility of this split. They wanted the option to do it any time between the beginning of June 2025 and June of the following year, 2026, and they wanted to do it without asking shareholders again. The board decided to go with a 1-for-10 reverse stock split. Imagine taking every 10 tickets you own and trading them in for just one. That's essentially what they did with the stock. Okay, pay attention to the date. On June 18, Unicycive officially filed some paperwork in Delaware to make the reverse split happen. It then became effective later that afternoon, so basically they put it into action. Trading of the new split-adjusted shares started on June 20, and you will notice that despite the change, the stock still traded under the UMC symbol, and you can easily recognize it. It does, however, get a new identification number. So every 10 shares turned into 1. If you had 25 shares, you'd end up with 2.5, but they're not giving out half shares. Instead, they round up to the next whole share, so you will get 3 easy. This rounding up is uniform, so it's fair. It won't generally change your overall stake in the company or your voting power, but it's something to keep in mind since it's not a perfect process. Also, important reminder that the split doesn't magic the number of total available shares into something else. It only affects the shares currently circulating. Before the split, there were about 126 million shares floating around. Now, after the reverse split, that number shrunk to about 12.7 million shares. This change also affects fancy things like stock options. Now, the price to buy those options become equally adjusted, so it's fair for everybody. In addition, something similar will happen to something known as warrants that are similar to options to purchase more stock, and all the prices tied to certain preferred stocks will also get mathematically changed. This section has a bunch of legal language. If you're super interested, you can check the actual document they filed with the SEC. As for other events, well, they had already announced that they did a reverse stock split. On June 17, they put out a press release to tell everyone the news, basically trying to get the word out this was not a secret decision. Unicycive has also registered some statements with the SEC. All registrants must do this and will have those statements amended. That doesn't change a lot for our analysis, but it is there. Here at the end, they are showing some exhibits where you can find everything we discussed, like the actual legal document mentioning the changes to the certificate, or the press release from June that we talked about. So let's zoom out and think about the full picture. This reverse stock split is like a financial facelift. It doesn't magically make the company better, but it can make the stock price look more appealing to investors. The big question is, will it work? One of the main goals here is that by increasing the stock price, Unicycive might be trying to avoid being kicked off the Nasdaq. Sometimes exchanges have minimum price requirements, and if a stock stays too low for too long, it gets delisted, and that becomes harder to attract investors. Of course, there's also the risk that this is just rearranging deck chairs on the Titanic. This reverse stock split won't solve fundamental problems, and if the company's core business isn't healthy, a higher stock price won't change that. Overall, Unicycive's reverse stock split is a high-stakes gamble. It could give the company some breathing room and attract new investors, or it could just be a temporary fix that doesn't address the underlying issues. Time will tell if this move pays off. Keep an eye on their financials and business strategy to see if they can turn this opportunity into real sustainable growth. Alright, that's our deep dive into Unicycive's recent filing. Now, what do you think about this reverse stock split? Is it a smart move or just a way to delay the inevitable? Drop your thoughts in the comments below. If you found this analysis useful, hit that like button and subscribe for more corporate decoder videos. Also, don't forget to check out the Discord community in the description. Thanks for watching, and I'll see you next time.